Will real estate ever be normal again? That is the question millions of Americans are asking following a shocking year where we have seen home prices skyrocket, appreciating nearly 20%. A situation that has forced regular people to begin behaving like speculators. Buying a home has always been the foundation of the so-called American dream, but with the average price now surpassing $356,000, that dream is quickly dying. But the point of this video isn't to inform you of these facts. You likely knew this already and you clicked on this video to see if things will change. Where is the real estate market headed, and should we expect better times ahead? In today's video, we break down all the new data and give you an unbiased look into the future of America. The truth will shock you. But before we begin, I wanted to quickly talk to you about the sponsor for this video, Masterworks. If you follow my channel, you probably know how turbulent the market has been. With the crazy volatility and inflation hitting a 30-year high, professional investors are either trying to find ways to significantly outperform the market or hedge against inflation. Masterworks lets you access an asset class that has outperformed the S&P 500 by 174% from 1995 to 2020 and seen almost triple the appreciation of real estate and gold. The asset class I'm talking about is contemporary art. Don't just take my word for it, the Wall Street Journal just called it one of the hottest markets on earth. The only problem, historically it's been impossible to invest in high-end art unless you are in the 1% of the 1%. Well, that is of course until now. Masterworks lets people like you and me invest in multi-million-dollar artworks for a fraction of the cost. Click on the link below to create an account, browse their artwork, and you can diversify your portfolio with one of the most stable assets around. Now back to the video. We begin with something I see all over YouTube, specifically from this guy, Reventure Consulting. His channel is probably the biggest on the platform when it comes to covering the overall real estate market. In his latest video upload, Reventure claims that the market crash has already started in some areas of the country and that we're moments away from the entire thing coming down. We see this theme elsewhere, even in mainstream media. Look at CNBC's latest headlines and you'll see all kinds of articles about how the end is near. The most recent evidence everyone is focusing on is Zillow's wild decision to end their iBuyer program and dump all their inventory, as well as new emerging announcements about a slowdown in buyer sentiment and housing starts. So let's start with the first, the Zillow issues. To many people, a large corporation ending a program that buys and flips homes is a sure sign that they know something we don't. They gotta be dumping before the music stops. But the truth is more complicated than that. In my opinion, Zillow ending this program has nothing to do with the market, but everything to do with incompetence and a labor shortage. Their entire iBuyer program was a failure from start to finish. We could talk about the details for hours, but in simple terms, it seems like Zillow had two serious issues. One was pricing these homes with their algorithm, which was a total disaster. Homes were almost always bought for way more than what they were worth. And second, they had serious problems with finding workers to flip these homes. As you may already know, there is a massive labor shortage and finding contractors was next to impossible in many of these markets. You may be saying to yourself, well, this is all still BS. Of course they're going to say that, but if you're willing to hear the other side, there is strong evidence that prices will continue to appreciate well into 2022. Why do I think this? Well, if you were not aware, Zillow isn't the only company with an iBuyer program. Dozens of these businesses have iBuyer departments that are continuing to operate and even expanding. Take for an example Opendoor. In their latest earnings report, they grew acquisition volume 79% quarter over quarter to a total of 15,181 homes. That doesn't sound like something you would do if you expect a crash. In fact, Opendoor plans to add 23 cities to their iBuyer portfolio, a sign of expansion, not reduction. Even Zillow themselves were forced to revise their original 2022 home value forecast, saying over the longer term, however, our expectations for home value growth have strengthened from an initial forecast of 11.7% through August 2022 to a revised forecast of 13.6% through September 2022. Sure, that may not be the 20% growth we have seen in the past year, but it's strong growth nonetheless. The fact is, dozens of other companies are thriving in this space, and iBuying will ultimately change the entire market. It's no secret that these firms are looking to take a bigger and bigger share of the real estate market, and there may be a time very soon when a large piece of listings will be controlled by corporations and not people. Just listen to Opendoor CFO Carrie Wheeler talk about the future of our company. It's quite shocking. What she says plays into the title of this video.
How big a share of the market do you think iBuying can become?
You know, today, when we get a seller with high intent, someone who really wants to sell their home, say within the next couple of months, Well over a third of those buyers, when they come to us, accept our offer. And that number has ticked up consistently quarter over quarter. So you think about over time, our ability to be nationwide, be able to offer on more and more homes as we increase what we call our buy box, which is the surface area we cover in a given market. And you think about that conversion rate north of 35%, and we can be a huge portion of the real estate market over time.
Okay, so iBuyer programs are prospering, but what about the housing numbers related to the homebuyer sentiment index that was mentioned earlier? Well, it is true that homebuyer sentiment is plummeting while home builder sentiment is surging, a bizarre imbalance that is troubling to some reporters. To many, this is a sign of a top, but I'd argue that this piece of data is a bit misleading. If you look into the details of how homebuyer sentiment is calculated, everything begins to make sense. Of course, if you hand out surveys to potential homebuyers and ask them about the market today, many will be unhappy given this rapid rise in prices. That doesn't necessarily mean they won't end up buying these homes for the same prices. While they may not be happy to do so, I believe real estate is one of those essential commodities. If houses appreciate long enough, customers cave and buy. How many people do you know that believe these price hikes were temporary, then after watching prices skyrocket month after month, jumped in and bought something they previously thought was outrageous purely because of FOMO and regret? If you need a house, you can only wait so long. Sure, you may be uncomfortable with prices today, but old prices quickly get normalized. It could be very possible that $500,000 is a perfectly acceptable price for a home in 3 or 4 years. This is not reflected in housing sentiment numbers. One of the best metrics to analyze when looking at real estate bubbles is the actual home ownership rate. Back in the previous bubble, it topped out at 69.4%. Today, we find ourselves at 65%. High, but not even close to the previous record. In my opinion, the only thing that will bring an end to these price hikes is a jump in mortgage rates, and since mortgage rates are tied to the interest rates set by the Federal Reserve, it may be years before we see any type of move. If you watch this channel, you already know that raising the rate is equal to destroying the economy. It would be political suicide for anyone to suggest this, therefore it's highly unlikely to happen. Instead, we'll get a massive real estate super bubble, and there is nothing that will stop it outside a wild black swan event that forces Jerome Powell's hand. Thank you guys for watching. As always, please make sure you hit that subscribe button if you enjoyed, and make sure you leave a comment below and let me know what you think about the current state of the real estate market.